session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure. Hey everyone, welcome. Good afternoon. Thanks everyone for joining. We're going to get started in just a couple of minutes. Hopefully we don't have any issues with internet and power this session, and hopefully we can get through this. We're going to get started in just a couple of minutes.
Hey guys, good morning. Welcome to the live session of Stock Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. It's yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey, welcome everyone. Welcome back to Stock Sniper Trading. My name is Ron. My partner is Dave. It's almost noon. It's almost 12 p.m. Eastern, and it is Tuesday, January 27th, our last trading week of the month of January to start off this brand new year, 2026. So, guys, I apologize for yesterday. We were getting right into the call, and I got a call from my mom, and the power went out at their house, and then my power went out over here. So I couldn't get the stream back on, but hopefully we have no issues on today's session and we can get through it. And we're still like severe weather warning down here, lots of snow, freezing. So I hope everything works out and we have a good session. Okay. We will be looking at gold. We'll do a top-down analysis, but as I was doing yesterday, I was going over this week's news. So I just kind of want to wrap that up. Today's news real quick. Has already gone by basically, but tomorrow is FOMC. So always be prepared and trade careful the day before and the day after FOMC. So tomorrow we'll schedule again. We'll come in at this time, 12 p.m. and we'll go till 3 tomorrow. So we can go through the entire FOMC tomorrow. But prior to FOMC, we do have some Canadian news coming out just right when Wall Street market opens up our overnight rate. It looks like they might pause at 2.25% here in Canada. And more importantly is the US FOMC. So it's the federal funds rate is set at 3.75%. It looks like the forecast is set at no change, a pause at 3.7. We'll see if they decrease this rate. Highly over 90% probability that they're going to keep it at a pause, 3.75. However, they could decrease, it's an option. I do not think that they're going to increase interest rates at the moment. So maybe we can rule that out. It's either a pause or a decrease. Okay. And that will affect the markets. So we have to be careful. And that's when they release the numbers. And then it's an FOMC statement as well at 2 p.m. It's not the FOMC economic projections. Will be on the next one. And then we have to pay attention to 2:30 because that's when Powell comes out and that's the FOMC press conference. That's when he gives his guidance and his monetary policy. He talks about the federal funds rate, their decision. Maybe they paused it or decreased it. He'll give his analysis on it. And he'll talk about the labor market. He'll talk about tariffs. He'll talk about inflation. He'll talk about all of these things regarding monetary policy. And the markets will be volatile at this time. So please trade careful. Have a plan tomorrow when you're going in. Know how much you're willing to risk. maybe map out how many trades you're going to take and things like that. This is not the time where you trade this and you're guessing on risk, on what you're doing and things like that. You should have a well-defined plan prior to even trading. You don't even need to trade. A lot of traders sit back, watch, and see what's going on and trade after, right? So they allow the storm to pass, then they trade. So make sure you guys have a plan. That's tomorrow, okay? Also, earnings. We had lots of earnings in the morning today. So this one is big. United Health Group. They are down 20% right now. This is the healthcare provider in the United States. They've been under a lot of scrutiny as of late, and they used to be the highest weighted security in the Dow Jones. Now they've dropped down to about 4%, and they are down 20% right now. So there's regarding news. This is in the market. If you are trading Dow Jones or anything like that, not all. It wasn't just related to their earnings, but like the news that came with it. Okay, Boeing had their report this morning. If you're looking for defense securities, Boeing, General Dynamics, Raytheon, Lockheed Martin. These are your defense contractors. Whenever there's war, you can start to look at the industrial military complex and the securities, defense securities. They're normally bullish whenever there's war going on. So a lot of smart money goes into these whenever there's war. So, you got to follow that money. UPS had earnings today. RTX Corporation, General Motors had earnings. So you can see some big American names have reported this morning. In the after hours, it continues with Seagate Technology, Texas Instruments, Logitech. And you can see tomorrow morning also going into pre-market tomorrow trading prior to the FOMC. We have ASML Holding, GE Vernova, AT&T, so telecommunications, Starbucks, General Dynamics, what I was just talking about, defense corporations and things like that, okay? And then if you continue to go through the earnings, look at then, guys, this is what we got cut off on our call yesterday. I didn't even get to do this, but look at Wednesday after FOMC. Look at in the after hours, guys, all of our big tech names. So if you remember 2 weeks prior, we had all of our big banks in the US report. Now we shift over to tech. So if you're trading NASDAQ and the S&P and a little bit of Dow Jones, you can see right over here on Wednesday after the close. Look how crazy volatile Wednesday is going to be. Midweek, you've got the FOMC. Then we have in the after hours, Microsoft reporting, Meta Platforms, Facebook, Tesla. So these are big names, IBM. Big names, guys. Okay. So we will have a lot of volatility come Wednesday and going into Thursday. Okay. Then when you go into Thursday pre-market earnings, MasterCard, Caterpillar is number one right now in the Dow Jones, or number two. This is the most heavily weighted security in the Dow Jones right now. It's shifted to Caterpillar. So big report coming. So if you're trading these indices, you have to be aware of this, guys. Nokia, Blackstone, Lockheed Martin, defense contractors, Blackstone, NASDAQ over here, Inc. So some big names, Royal Caribbean Cruises, sorry. And then you can see Thursday after the close, we've got Apple. It doesn't stop, big names, okay? So Apple will be reporting, SanDisk, Visa, Western Digital. So big names this week, big tech names. Then we cool off on Friday in the morning with SoFi, American Express, Verizon Telecommunications, Chevron. Chevron has been in the news lately with Venezuela and what's going on over there with the oil, Chevron. So if you guys are following this, I highly recommend you guys do, because, these are how securities move with geopolitics that happen around the world. And do these corporations benefit from what's going on, or will they not? So, and then we have Exxon Mobil. So you can see if you're a crude oil trader, these are the big names in the United States. Chevron, Exxon, Texaco. These are your big oil securities, okay? And then Friday in the after hours, you see nothing. So can you guys see how busy earnings are going to be coming into starting tomorrow. Okay. Some news around the markets right now. S&P rises toward record, but insurers drag the Dow lower. So you can see right there, UNH, that's United Healthcare, down 20%, 19.5% right now. So if you click on United Health, you will see exactly why it's down. If you click on it right here, it will take you to United Health, and there's got to be some type of news that's dropping it almost $70 per share today and 20%. So that's a significant drop. It's not 2%, it's 20%. So that's taking off billions and billions and billions of dollars off their market cap. What is causing this? So United Health stock plunges, leads insurers lower after Trump Medicare spending plan surprise. So no surprise over here. Donald Trump has something to do with this. And you can see if you go into the article, you click on the article, you'll get a better understanding of what's going on. Okay, I'm not going to do that because we got to get busy on our gold security. But you can see S&P 500 right now is up 0.5%. NASDAQ is up 1%. So technology, maybe going into the earnings this week, there's a lot of front loading on the securities and purchasing going in. And then you can see that the Dow is down negative 0.6%. And a lot of that, those 343 points Dow is down, probably has something to do with the insurance healthcare sector and specifically United Health. Okay. Gold is up 0.2%. And Russell is also up. So our index that's red today, if you're trading, is Dow Jones. The rest are all green. Could be going into tech earnings, and that's why a lot of front loading, anticipating good tech earnings. Okay, so that's in the news right now. And what else we got going on? Consumer confidence tanks to the lowest level since 2014. No surprise there. Amazon set to concentrate on Whole Foods and grocery delivery. TikTok is in the news. What else we got? Utility bills are out of control, but don't blame the Arctic blast or AI. Yeah, my electricity bills are getting out of control. I don't know about you guys, but they're getting out of control. So I got to get some pips on the next couple calls just to pay for all these energy bills over here. Oil rises as traders weigh on Iran risk, fallout from US freeze. So lots going on in the news, guys. UPS to cut 30,000 jobs this year. Okay, so UPS has earnings and they're in the news that they're going to cut 30,000 jobs. That's a lot of jobs, and not just UPS. Like there's a trickle down effect. If a big employer like this starts cutting 30,000 jobs, there's other providers, that the middlemen and that work, that supply UPS and things like that. It's just they're gonna lose jobs, and then you can see that if we keep losing jobs, cutting jobs, you can see a recession coming in the near future. I hope that's not the case, but you never know what happens in this type of economy. Guys, we sent out some signals, trade ideas, long on NASDAQ right over here, above 25,877. It hit 100 pips. Commodities over here, there was a couple call outs on going on long on gold above a 50.68 for approximately 200 pips on that double bottom right there. There it is, double bottom. There's volume closing above, and then you have a push, pullback. There it is. And then there's your second leg. Traditionally, the second leg of the double bottom has the more volume that could break the neckline. And there it is. Okay. So we do have signals, guys. If you need those as well, they're provided here at SST. And guys, there's a free Telegram channel pinned at the top of YouTube for you guys. There's over 100 of you guys. If you guys can kindly leave us a like, subscribe to the channel, hit that notifications. Dave is trading in the New York sessions. This was him and the crew looking on sells there. All of our live links to our YouTube channels are in here. Before and after of trade ideas. We do here. Remember this blog we sent out over a week ago on this TRX? We sent out the blog and it was under $1. It was about here, 98 cents. And you can see with the gold news, it pumped up to $1.43. That was up 50%. And then yesterday in the after hours, it was up an additional 15%. So if you have after hours trading, and pre-market trading, you can get in and out of these securities and you don't have to wait for market open if you're trading in the stock market and you have an account or broker that allows that. So there it is, guys. You just got to kind of do some research. Gold is moving, silver is moving. There's got to be corporations that dig for the metals out of the ground. Gold doesn't just appear out of thin air. So you can look at these companies and you can see there is securities, like these are penny stocks under $1. And you can see how they can give you a 50, 60, 70, 100% return if you get in at the right time and you don't over leverage and you apply the proper risk management, you can do well. Okay. So that was the blog we sent out, guys. That's why I tell you, it's very important. Read the blogs that we provide, guys. They're current. They're up to date with what's going on in the market. Here was one we did on gap up and gap down candlesticks. This was the blog I was going to read yesterday before the power went out, but this is one for you guys to read. Gold has on every Sunday night has consecutively for the 4 weeks in a row has gapped up. Yesterday was the first time it filled in the gap. And if you go back and you look at it and you back test, when it filled up the gap, it went right in there and then it bounced right out of there for a nice little bounce by. If you were aware of what gap up are and how to identify them and understand what's going on behind the scenes there, okay? How they can bypass orders and things like that, and there's still pending orders waiting in the market, okay? So everything is on our free Telegram channel. It's all available for you guys. It's pinned at the top of the channel. I highly recommend you guys join this, guys. It's free and it gives you basically everything we do at SST. This is our website, guys. So lots of education with myself and Dave, lots of courses, tutorials, blogs, boot camps, webinars. Too much to go over on this call. I'd like to dedicate a call just to go over the website and education. And if you guys have any questions, we can do that at some point. Lots of live sessions here as well. Dave is doing the New Yorks. I'm coming in. We're doing the post New Yorks. Tomorrow, don't forget FOMC, a 3-hour session from 12 to 3, okay? And the blogs are over here. Guys, I would be reading this with you guys, gap up, gap downs, but we don't have too much time. We want to get into the charts. If you guys have some time over this evening, please read this about gap up and gap down candlesticks and clues in price action trading, okay? And they do help you understand the language of trading when you understand what is the significance and implications when a candle or daily candle, 4-hour candle, hourly, 5-minute candle, when they gap up, when they gap down, what is the significance of these, okay? And finally, guys, if you guys can hit the subscribe button, we do appreciate you guys. We're on our way to 92,000, and we do appreciate your help, okay? We're going to get into gold, okay? So there was that double bottom. There was that call out above 68 that I just showed you, and there it pushed up, broke out to just above 5,100, that psychological area. It's having some difficulty breaking above 5,100. You can see it's tried like multiple attempts there, double top, back down, came back again, back down, came up again, double top, back down, came up again, little lower, came deeper, double bottom, back up, right back up to 5,100. And you can see it's kind of retracing or consolidating right in here. So are we going to make another attempt to come up and test 5,100, or are they going to push it down, like to 5,060 down into here, maybe possibly touch this double bottom, triple bottom area, okay? And that's, look at the psychological number, 5,050, okay? So I'm going to do a top-down analysis, and we're going to get into this on gold. So I hope you guys are ready. Maybe you guys have your charts already prepared, and we can do our analysis together. But I'm going to go from the daily to the hourly, and then bring it down to the 5 minutes, okay? What else do we just want to go over? Just make sure we don't have any news today. President Trump speaks at 4 p.m., okay? So this is very important, guys. It's right at the market close, so whatever he says could affect after hours trading, it could go into the futures market, could go into the way how Tokyo opens up and things like that. So President Trump is speaking at 4 p.m. right at market close. He's due to speak about the economy in Iowa. Okay, so just so you guys are aware of that, just be prepared, please. Anytime he's speaking, especially when he has a scheduled event and it's about the economy, we are traders. This could affect everything that we are doing here, okay? And guys, thanks for everyone joining. Welcome everyone on Zoom. Sang, good afternoon. Bruce, welcome. Rafi, welcome. Sergio, thank you for joining. Danny, welcome. Zilvenis, welcome. Thank you for joining. Carla, welcome. Yeah, we'll get into that, Carla. We'll get into that, okay? And welcome everyone on YouTube. Thanks everyone for joining. Shefki, welcome. Thank you for joining. I hope I pronounced that full dis. Welcome. Sunil, welcome. Thanks. Tony Gold, welcome. Thank you for joining again. Habibi, thank you. We appreciate the support. RJP for life, welcome. Do you hear Uncle Ron putting down all his gold coins in the background? A gold necklace. But I do have a lot of gold coins and silver coins too from a young age. And, just continuing to save them, accumulate them. And eventually, after 20 years of holding them, they're finally seeing the rewards. So silver is crazy volatile, guys. If you saw it yesterday, it was at like $96. Then it went up to 120. Then there was a massive sell-off back down to 100, broke 100, then back to 110. So you can see we haven't seen silver this volatile in years, like decades, actually. We were excited if it moved up $1 per ounce. We were all excited. Now you're seeing $5 moves, $10 moves, $20 moves. Like it's getting unreal at the amount of volatility in the markets with everything, with anything to do with metal right now. So, but there is a saying, as fast as it can go up, it can come down 2 times faster. So, I don't marry anything. I don't get attached to positions. I like to get into profit, scale out, do my thing, because there's been opportunities where I've held trades and investments for years and then to have them just come right back to where it started. And, so you got to go in with a real security if you're looking to hold and go through those ups and downs. It's kind of like a set it, forget it. But everyone has their own plan. Everyone has their own strategy. Everyone has their own style. Just do what's best for you and don't listen to others. Just do what's best for you. Okay. Welcome everybody. And if I missed anybody, I'm sorry. Vishnit, welcome. Hey Ron, Fusion Markets looks great, but it's not available for Ontario residents. Also, many great offshore broker not available in Ontario. Do you have any best broker on your mind? Vishnu, I used Fusion Markets. Dave and I were using it for over 10 plus years. We're kind of grandfathered in before Ontario made those new laws. Any province in Canada can use Fusion except for Ontario. Ontario, where we are, has some of the most strict laws in finance in all of Canada and North America. So unfortunately, yes, if you live in Ontario, you don't have access to Fusion Market Brokers. But that's what I use, so that's what I speak on, okay? Thank you, Sergio. For anyone in Ontario, Sergio in our group on Zoom says you can use 8cap. Check out 8cap. Geraldo, you're in Montreal. Fusion and Blueberry are perfect. So check out also Blueberry. Okay, I'm just relaying what the snipers are saying in the Zoom. But it's so there's a couple names to check out, right? Do your due diligence on Blueberry, on 8cap, and there you go. Okay, I'm gonna start off with gold, guys. So on the daily, we're gonna do some analysis. Wow, holy shit! Like, look at the run up on this thing. Like, it is crazy. It's crazy. Like, we don't even have to look at the really silly indicator RSI to tell us we are overbought. You can see we are clearly overbought. There was the previous all-time high right there. And then you can see if I stretch it into the future, the volume is above. We have another big pivot right here. This was another previous all-time high. So I'm making it a daily point of interest. Right here, 4,550, I would say around there. When it topped up, pulled back, came right back up. There's the volume bar that closed above. Took 1, 2, 3, 4 bars to come back down, retest that location, about 50% point of control. And since then, we've been taking off. Since January 19, you can see a nice bullish ignited candle, closed near the high, continued. Did it come into point of control, pullback? No. Came up, higher low, popped the wick, drive, again closed right near the high on the Tuesday, January 20th. Again, no big pullback, still holding above 50%, made a new all-time high, pulled back. Then we opened, then we had a bearish day on the Thursday, January 22, but you see how it made a higher low, still holding above the body of the opening position. So that opening balance still held. And then they continued to come up. This candle did its job, continued to fill the wick, break for a new all-time high, pull back again. We're above 50% here, continued for a new high. Look at how we opened this week, Monday, January. over the weekend, very bullish, okay? It's an ignited open. I'm going to highlight this, okay? This is not just a Monday, but it's the start of the week, okay? So that's our weekly opening balance, 4,980 on gold, and it's still holding steady. We haven't even retraced back down to retest this week's opening. Look how bullish Monday was. We got up there. There's our new all-time high, 5,110. So we broke that psychological 5,100, right? So there's Donald Trump's makeup face, orange for the all-time high, $5,110. So again, if you're going up in certain increments, right? If you're an intraday trader, scalper, maybe you go up $25 moves, but if you're more of a swing trader, maybe you highlight, quarter positions, $50, hundreds. So if I do it like this, every $100 from 5,100 price discovery, I go to 5,200. Okay, there I make a yellow daily point of interest. If it ever comes up there, it could be 5,200 and resistance and back down. Okay, next one would be 5,300. Right, I can continue to go up the chain as much as I want. 5,400 until I get to that nice psychological 5,500. And that's where a lot of analysts are saying gold could eventually go. Even JP Morgan had targets of 5,400 for this entire year, 2026. However, it could get there in just a couple weeks. But a lot of traders are saying, this can still keep going. Absolutely. This is gold. We're not trading Mickey Mouse. This is gold, okay? So gold, when it wants to go, if nations, institutions, it's a safe haven. When the dollar is plunging or anything, there's uncertainty around the world, everyone is flocking to gold. So it could go up 5,500 by the end of the call, but there's got to be some type of significant pullback to trigger another big move. However, right now you see, if you're trying to short gold, you're getting ruined right now, okay? So it doesn't even have like a double top. It's still driving, so we got to follow this. There was a big sell-off when it hit that all-time high yesterday. It did get rejected. It was coming down. But look, the inverted hammer candle, just this little bit of opening balance on Monday for the week, continued to hold gold up. So look at how we closed, okay? Inverted hammer, learn your candlesticks, okay? Inverted hammer. Closed, we opened today now, bullish ignited, okay, at $5,010. So that is our lowest point. That's the low. There's no wick on our candle, okay? So when I'm identifying highs and lows, I use a purple line. That's the lowest point. It is actually the opening balance, which is a bullish ignited candle. And look at it. Is it continuing to do its job? It's got a big wick to fill. Like this is a big wick. It's not like this wick and this wick. These were easy wicks to fill and pop. Look at what we got to do on this one. You have to continue to drive up, and get up there and pop for a new all-time high. We drove. It's driving. Drove. Look, but did it get to the all-time high? No. Technically, that's the highest point of the day. 5,103. That's $8 shy from the all-time high. Okay, so that is technically a lower high. So sellers are starting to offer from right here, from the all-time high to right there. That's where the sellers are offering. They have not allowed today's candle to continue to drive and break for a new high to extend the rally. Now there's a little bit of relief. There are some sellers and they're offering. So we do have a lower high, but it could continue just to come down, refuel itself, grab more pending orders, and drive up the wick and break through there. But right now, that's where we do have sellers in the market, okay? Now, we're coming down. We're trading right here at 5,080. What about all of this bullish volume that's still left in the candle? We still have less than 5 hours to go. So what I do here in this situation, and guys, please pay attention, this candle has not closed yet. So I basically can't analyze this candle until it officially closes. But if I'm going to trade for the next hour or two, what I like to do on a live daily candle is if it's got some significant volume on the either bullish or bearish, which is bullish, I like to find the opening balance and drag my Fibonacci tool right up to the balance of the volume right now. I know it's fluctuating, so it is moving. So it's not going to be 100%. Guaranteed, but it's going to give me a good rough estimate. There's 50% of the current volume right there. So I'm going to draw a yellow line to let me know that 5,047 and 77 cents, so right around that 5,050, right around there, that could be the point of control. If it comes all the way back down there, that's where the buyers could hold it up and push it back up. If we lose this, then the sellers have momentum to continue push down on this bullish candle, okay? So that area is of significance, okay? That yellow line. Okay, as of right now, the call, okay, right now, as of, again, 12:20 p.m. Eastern. Okay, now it is clearly still bullish, okay? There's no signs that it's bearish. Just yesterday got rejected, okay? So there was sellers, but it's still pumping back up. So maybe we got to see it get rejected again, or maybe consolidate here, then push down. At least maybe we know it's top, or it's just going to continue to drive. The best case scenario is buy decent pullbacks, trade with proper risk management, trade with the trend. If you're counter trading, make sure you have counter trading rules on all time frames, okay? Now what I do is I break the daily candle down into the hourly, okay? Either 4 hour or hourly. I'm going to go into the single 1 hour bars. I can see where it was consolidating. I can see the hour when we did hit the all-time high right there. It was Monday at 1 a.m. Then there's 2 a.m. There's London. Look at all the inside consolidation. 7 a.m. Here's Comex, some news. Then we came back up on Wall Street, 9 a.m., 10 a.m. Look, it tried to get back up there, 11 a.m., noon. This was our call yesterday before the internet shut down. Beautiful sells right after. It came down. Look at the hourly candles, then came right down here. There was the gap fill, guys. So you know what I mean when that blog that we just wrote, there's where we closed on Friday, 4 p.m. This is where they gapped up the market, the opening price. So all of this is a gap in the market right here. There's your gap, okay? And look at how, if you had a pending order in this gap or a pending signal right in there, I will make it neutral so you guys can see, right? That's right there. So if you missed it, okay, a lot of traders miss it, but it doesn't take too much effort to just put a line in here, whatever color you want, doesn't matter, and just add an alert. Eventually, gaps do get filled. And then the $1 million question is, Ron, how long does it take? I don't know. Sometimes it takes the next 5-minute candle will fill in the gap. Sometimes it takes an hour. Sometimes it takes a day, sometimes a week, sometimes a month, sometimes a year. It all depends on when the market wants to rotate back in there. Why? Because they've bypassed pending orders. So it's basically like money sitting in the market that eventually the market, if it wants it, will come down there. Look now, you can see Monday, right at the close of the market, 4 p.m., they came in there on thin volume when the market closed. You talk about manipulation. Oh my goodness. Like, look at when they came in here, right in there. Look at the wick. It basically picked up all those pending orders, and then look at the move right after, right? You could go down, and what you could do is, if you really want to get into backtesting, highlight that wick, because it's on an hourly, and then go into your trading, whether you're trading 15 minutes, 5 minutes, 1 minute, and then you can clearly see exactly what formed in there, patterns, recognition. Look at the 5 minutes, okay? So we bottomed out at 245, came back. There was the big drop at market close, 4 p.m., 4:05, 10 after. Look at it, came right in there. There's your 5-minute candle. There it came up again, closed. There's your first bar that closed above, pull back into their higher lows. There's your ignited bar. When the daily candle opened 6 p.m., you're telling me, okay? I'm a nobody. I'm a nobody. But you're telling me that the market just naturally came down here at this time at 4:30 p.m., moved up at 5, and set it up perfectly for when the daily candle opens up at 6 p.m. and it's a bullish ignited candle after they grabbed all that liquidity. Okay? Call me crazy, but I've seen this a million times. Okay? So get to know your patterns. Get to recognize and be patient and wait. I don't know how to tell you guys this on a daily basis with Dave and I. Patience gets paid in the markets. Impatience, you'll lose in the markets, okay? And if I go back to the 1 hour, we can see specifically what it did when it came in there. It was kind of barcoding, bearish, bullish, bearish, came in there. The question is always, Ron, if the gap fills, is it going to go the opposite direction? No, it could have just came down there bearish what it did and closed bearish below there. Then that would have been a bearish gap, like a red box, could have bounced right back in there, and then gold could have been selling down to here. But at least it gives you a good setup, a good area to take a probable setup. Trading is all about probabilities. It's not about making money, okay? Trading is all about probabilities. If you understand how to look and identify for high probable setups, then you will be eventually learning the process of how to make money, okay? You don't want to just trade in no man's land. You want to trade where there's significant orders waiting in the market because you want to be part of those orders, right? Does that make sense, guys? Okay, so that was read our blog right over here. Here it is, gap up and gap down candles. Guys, this is a blog I'll go over this at the end of the call if we have time. There's a gap up candlestick, implications, gap down candlesticks, implications for pending orders, stop orders, limit orders, market manipulation concerns, after hours trading. Did that not just happen during the after hours, guys? Okay, a lot of people are sleeping on these blogs, but I'm telling you, these blogs that Dave and I do are related to real-time events happening in the markets and to continue you guys learning. But a lot of you guys don't read these. If you don't, it's not hurting my feelings. I understand what are gap up, gap down candles. I know what they are. But for you guys, some of you guys don't know. It takes 5 minutes out of your day to read this blog to help you guys. That's why we do this. If there's no engagement, like we're not going to continue doing this, right? If no one wants to learn, I don't need to reteach myself. We're here for you guys. If you guys are not, supporting this, me and Dave are getting turned off and don't want to be here. We got other things to do, but we're here and we got to continue doing this, guys. So look, after that, what happened? Again, it tried for the all-time high. Did it come into the all-time high? We know the all-time high is right here. The orange line came in, did not, came down, but still didn't break down, still holding, consolidating. There was a big drop today, 9 a.m., right there to the daily point of interest, and then 10 a.m., they reversed it right back up. Now, 11 a.m., we tried. There's the daily high. Failed to break a new all-time high. Now we're inside here. This is a big hourly bullish candle. So that's already printed. It's already closed. This one I can definitely analyze. I can see it's already closed above some significant bars. It didn't close all the way above here, like to close above the entire structure, but it's still engulfed a lot to the left. So first thing I do is I want to know where the halfway point is. I want to know where the point of control of this bullish candle is, because I want to know if we continue to respect it today or if we're going to disrespect it or lose it today. Okay. So right there, opening balance, closing balance. I can verify this because this was a 10 a.m. candle and it's already expired. It's already closed. There's the halfway. There's 50% white line because I'm on the hourly. Now, I want to find the point of control. It's using the Fibonacci. It's one above, one below. 618, 382. If you have the 382, 618, I don't give a shit if it's above or below. Just know it's this zone, okay? We don't need to get into the mathematics as why it's above here, or it's just the way how you have your Fibonacci set up. You can click the reverse setting. That's on you, not on me. Now, I represent it with a green box to let me know that this bullish candle is bullish. So if it ever comes back down in here, it's testing a bullish POC, okay? Have we came into here? Stretch it into the future. That's another thing. Stretch it into the future, add an alert in there. So what I do is I add an alert. That's what keeps me patient. Whether it comes in here in the next 20 minutes, or it comes in here 1 hour from now or 2 hours from now or tomorrow, I will be alerted. That doesn't mean I just trade blind. I watch and see what's happening in there. Do I recognize a pattern? Do I see what's going on in there? Okay. Now that's identified. What happened? So we closed right at the high at 10 p.m. Look at the size of the wick. There's barely any wick. So we did open. It opened bullish, ignited. It popped that wick. It continued to drive, got up to there, highest point of the day. Then they rejected it back down. It came down there. That was low, and it closed right there. Now, we just opened this candle at 12 p.m. This is when we started the call. It opened bullish. It came up. Look, they're rejecting it back down. So there's a body and a body right there. So that's where I draw another white line. See how I'm kind of consolidating the volume, consolidating the time frames from the daily to the hourly. Now I see the hourly volume try to get out there. Do I see any volume closing above there? No. And then, so I see a lower high. I see they reject it. They come down. They take out that low. So the sellers are pushing it down. But then it stopped right there, just shy of coming into our point of control. Then the buyers on the hourly protected it. They brought it right back up. And now we're trading essentially right where we opened on this hourly candle with 31 minutes to go. So this candle still, if you're watching this, you got to watch for another 31 minutes or you're trading on impulse. Okay, what I like to do is I like to break this down further. You can go into the 15 minutes if you like. This is the 15 minutes. Nice little push up, pull back. You can see we're making a neckline where we might flip back up, double top, or new all-time high, or sellers might push it back down and then we come back into the green box. Maybe it drops lower or holds here. These are your 15-minute candles. If you're on a 15, it's closing in 20 seconds. So let's just stay on this 15-minute candle because it's going to close right now. And it's also a 30-minute candle at the same time because it's 12:30 p.m. So we're going to get a new 1-minute candle, a new 5-minute candle, a new 15, a new 30. We will not get a new hourly because that one still has 31 minutes to go. Here's the close of this 15-minute candle. Let's see. So it opened. It was initially bullish. Like even if I mark up the 15-minute, this bearish candle, I could even cut it in half with my red cut line right there. There's the halfway point. I make it red, make it a little thicker so you can see. And look at it, 5,095. That's where that 15-minute candle came up right into 50% of that previous 15-minute candle. This is me showing you. You can do this shit on any time frame. And then it came all the way down. Did it have a tweezer bottom low? No. Does it have equal bottom lows? No, it looks like a lower low. So they did push it down a little further. And then it came right back up with those dip buyers. And then that's where it closed. So it basically engulfed that. But now we're like, if I want to consolidate the last, hour of volume, that's the consolidated range. You can see how tight it's trading. There's black volume. Came up blue volume. There's the black volume. Now we got some blue volume. We have a wick, a wick, a wick. So if we sell, we got to, break this and then continue to fill all these wicks and break down to get into our green box. However, if it's still, blue, black, blue, it could definitely break through here and test today's high, maybe the all-time high supply up there. If you're still staying on 15 minutes, this is what you got to watch for. This candle is going to close in 13 and a half minutes. Okay. So you got to watch that. I like going in on the 5 minutes. Sometimes I even like going on the 1 minutes, but this is the 5 minutes now. So these ones, look, we're bullish. I can see it hit the highest point of the day at 11:20, bearish, bullish, bearish, came back down. Crazy candle here at 11:40, pushed down again. Came up. There's where it came right up to there. That was where I marked that red line off of that 15-minute candle. There it is, 11:30. And you can see bearish engulfing. And now we're coming right back up. So is this like a double bottom on the 5 minutes? Where? Right around here. If I see the bodies now, maybe I go down to that wick. See, I make it like a 5-minute green box just to show that on the 5 minutes, it is gaining a little bit of support above our hourly point of control. Like it came down there, back up, came down there, back up. I don't see any bear volume closing below there. So they're building it up. So it looks technically like it came down one time. There's the neckline. Second time it came down and now we're coming up. So I always say traditionally the second leg, this is the second leg, traditionally has more volume. So if that's true, then we should see it break this and maybe get up to test these bodies in here, okay? If this double bottom plays out. However, we're in a trend coming down from the daily high. So we have to acknowledge that, okay? You can either go like this, from the highest point of the day, from the wick. If you're using wicks, stick with wicks. Plot it from A to B, right there, wick to wick, and extend it, right? If you go by the wicks, some traders will go by the bodies, okay? And if you go by the body to the body, then your trend will look something like this, okay? Regardless, it should be somewhere in there. If I go body to body, I can do something like that. If I do or I can do what is called a trend channel, not just a trend line. Trend channel can be from the wick to the wick, right there, you see? And then I can drag it down to the bodies. That's called a trend channel, okay? I'll even make it red to signify a bearish trend. Does that help, guys? Do you understand what I just did there? So if you are a trader who trades wicks and analyzes on the wicks, keep it consistent. From the top wick, from point A to B, you connect the wicks and extend it further out. If you're a trader that likes to go for the bodies, there's a body, and then you see now I have a trend channel. Okay, and it's the same thing we use in psychology. The top of the trend channel is the resistance. The bottom of the trend channel is kind of the support. The dotted line is the psychological 50%, like what we always talk about, the halfway psychological point. Okay, so what we got to see for bulls is they got to break through this bearish trend channel and close with some blue volume above here to break out. You see now how it came in the trend channel and they're rejecting it back down. Okay, so yes, Ron said traditionally double bottoms have more volume, but right now that doesn't apply in this situation. That's why trading is not guaranteed, right? We got to look at patterns we recognize, probabilities. If we continue with the uptrend, we're trading with the trend, still to be from here, made higher highs, higher lows. There's a double bottom. There's that extension, second leg, bigger volume, and then it's coming down. So this is what we got to wait for. We can either speculate and we can, go in and try and take a buy here, but it could get rejected and pushed back down. So this is where I wouldn't risk a lot, right? I'd go in lower risk. However, if I'm looking to sell, again, I could go sell, speculate, lower, unless I'm confident it's going to sell, or I wait for some selling volume to close below here. But I also have to know if it sells down, like comes down through here, come down there, that's the higher time frame point of control. That's where maybe bigger pending orders are waiting. They don't want to buy up here. They want to buy down here at discount in this zone. Okay, so if it comes down there, it could come down anywhere in this green box and bounce back up. So if you're selling, what I like to do is measure it from down to here. If it just comes down to the top of the green box, that's 50 pips. That's a good scalp to start reducing risk, taking your stop loss to break even. If it comes down to the white line, look, it's about 100 pips. That could be your trade, right? Or have some where you take partials out and leave a runner, right? If it clears the entire green zone, you're about 140, 150 pips. Now, if the sellers close below, okay, that's a different story. Now we're having a different conversation. If the sellers end up closing below here, they confirm to me they close below that green zone, they hit all those pending orders, they're in control. I change that entire green zone red, maybe it comes back in here, and then we sell off down to here, right? So I'm going to leave these arrows like this, okay? Remember, I'm giving you guys options. Option 1 to continue to go like this, maybe option 2 or option 3. What do you guys think? And when it's still consolidating in here, if there's no trade, there's no trade, right? This is where I look at my spreads now. Gold, I've got a 1.2 spread. I normally like to get it down to half a pip. But maybe there's some volatility now. Let's see, guys. And do we have anything? I'm just checking our signals over here. Okay, so just 12:18, like 20 minutes ago, 5088. Let's highlight that. 5088. 5088. Okay, so we've got a sell signal from the SST scalper, like right here, right below this red box. Okay, so it's active, right? But we got to get maybe some closing pressure, volume, closing below here because we have a wick and a wick. Can we get a black candle continuing to close down here? Will this broadcast be saved? Yes. All of our live sessions are saved unless our internet or power shuts off. Is anyone in a sell or buy or on the sidelines right now? If it's too many of these lines, okay, I'll remove them now, and then we'll just continue watching, and then I'll put the lines back if we see something, okay? Sidelines, nothing wrong with being on the sidelines, nothing wrong with selling, nothing wrong with buying, guys. Just remember, everyone's going to have a different bias, but just at least do this. Wait for a body to close to make a decision. Unless you're going in early, you got to know you're trading on impulse, okay? And then that candle can go against you, right? But if you just control your risk, then you're okay. But if you go in and you over leverage, over risk, you're putting yourself in danger. You're probably going to panic, and I suggest you don't trade like that. But who am I? I'm a nobody. Remember that, okay? There's a lot better traders than myself out there, but Some days are winning days, some days are losing days, some days are break even, some days are learning. Every day is a learning day. Every day is a learning day. If you win, you learn. If you lose, you learn. If you break even, you learn. If you're watching, you're learning. Every single day in the markets. I don't give a shit who you are, where you're from, how many years you've been in the market, how much money you've made, how much you've lost. Every single day is a learning day. If you don't understand that, then you got a lot to learn. I'm sorry to burst your bubble and this and that. Someone said, Ron, you're an asshole. No, I'm not an asshole. I just speak facts. I'm real. Some people don't like people that are real. People want me to lie to you. Want me to tell you everyone on this call is going to be a millionaire. No, it's the hard fucking work. Hard work, guys. There's days I sit and stare at this computer for a week and I don't make $1, right? I just know that that's part of the game. You got to learn to not force trades. I can force trades in this area right now. I could go into buy sells. It's just a traffic jam here. And I know if I do, I could be making a mistake. I could wait out another 20 minutes, 30 minutes, 1 hour to see something a little bit better. Like, we're not trending right now. Now it's trading sideways in a tight zone. Like, this is beautiful. I recognize this pattern. This was the buy we had earlier, right? But I'm not getting that right now. So I don't need to force a trade. Maybe it wants to sell down in here and I'd rather wait to buy in here. If I'm looking to buy right here, I get at a better discount down in here. If I'm selling, I know that if I'm a seller, I got to have a plan because I know it could be selling where these big buyers are. Or I just wait. If I want to just continue with the buying bias, I'll just wait for the volume to come down here and see what happens. How many of you guys think trading is easy? Like, honestly, tell me the truth. Do you think that this is easy to do on a daily basis? It's not. It's not. But if you look for high probable setups, it's just like fishing, guys. We can go out on the lake. We can go fishing every single day. There's days where we're going to go and we're going to get skunked and we're not going to catch any fish. But there's days where you got to go out there and you got to be patient. You got to throw your bait in the water and you got to wait for that fish to come and bite. Okay? Those fish finders, all the technology, indicators, shit like that, they can take us where the fish are. But if you don't have the proper technique, those fish are not biting. Doesn't matter where you go. Okay? So same thing here. Look at it. There's a lot of bites here. I can see every time it comes down here, the buyers are biting. There's a wick, a wick, a wick, and a wick. So it's showing me there is buyers there, but we're still in this parallel channel trending down, descending. But I don't see sellers convincingly closing below yet. Will this be the bar? There's 3 more minutes to go. This might be the one that closes below. And you can see that there's more selling pressure coming down. But again, look at that spike, again, come back up. So, there's 2 sides trading here, sellers and buyers, right? Rav, did you watch the UFC? Did anyone watch the UFC this weekend? Justin Gaethje against Pimblet. It's the first card of the year. It was on the Paramount Plus channel. Yeah, that was a brawl. That was a good brawl. That's like how we look after a trading session. We look like Pimblet at the end of a trading session. But they got to do something with like the weight cuts. A lot of guys are coming in. They want fainting on the stage at the weigh-ins. They just look depleted and things like that. They got to fight their own weight. It's hard watching them go through that. As a fellow Scouser, you're proud. Yeah, we're proud of. Like, yeah, he put up. He's tough, man. There was some times in that fight I thought he got knocked out. I thought, no way, in the first round. I thought, that's it, it's over, and he kept getting up. But we'll see, guys. Okay, so let's follow this candle. Okay, so it is pushing down and it's got volume coming down with it. Okay, so will it officially close below here? And then if it does, I'm gonna, make this green box red because it could come back in here, retest this, and get rejected, and then we further drop down. So if you're in sells, okay, remember our signal we had at 88. Okay, I can see it's down to 78. That's 100 pips from our signal. Okay, right over here. Okay, so, when we're looking for areas, there it is, the volume closing below, push down, retest. Here's the close now. Okay, so I watch right into the close. And I'm very, technical. So did it close below the green zone? It didn't. It closed right at the green box, okay? So, yes, it's very close. Some traders will make it red. I don't, okay? What I do is I'll still go with the bear volume, and I cut it in half. Okay, so 5,083 is now the halfway point. So will now the buyers build it back up and close it above here to push it back up? Or is this the one where could be the liquidation candle? You know what I was talking about, those liquidation candles that they know that there's a ton of stop losses and pending orders here. And this is where you'll see a big black candle, fill that wick and come right through here. Okay, otherwise, the buyers, if they want to protect, they got to start coming in now, or it will come down deeper, okay? So there's a few options we have. We can either go in a trade right now. You could either buy or sell. That's your choice. Or continue to wait it out, okay? I'm going to wait it out. I'm not convinced yet, okay? And someone's going to say, Ron, why are we not buying? Why are we not selling? Why are we not doing this? Why are we not doing that? I don't know how to answer that. I'm just saying I'm patient right now. I want to see what's going on. This is my daily bar. Okay, there was the opening price. It was initially bullish, came down. That's the lowest point of the day. There's our volume right now. It's a bearish candle on the daily. I can add some indicators now. So we are currently below the 9 EMA. We're in this descending trend coming down. The 200 EMA, there it is, the purple line. It's right on top of our green zone. So you guys know, some of you guys use your indicators for trading. Maybe we let it come down and touch or break the 200 EMA in our green zone. This would be a better opportunity to buy than just right here. Because if you do, you're still going against the trend where it could come down further and we get a better discounted buy in a higher demand area. No guarantee if I buy in here, I'm going to make money, but I'm looking for higher probable areas. Okay, so they're retested 50% of that previous bearish candle, and now they're pushing it back down. Okay, so this candle has a job to do. Its job is to continue to fill that wick and break for a new low because we're trending down now. Lower lows, lower highs, lower low, lower high, lower low, lower high, lower low coming in. Okay, so we are below this, still bearish. For you guys that are in sells, congratulations. You guys are now moving with the momentum of the market. If anyone is buying right now, you can buy. There is buyers, wicks, but you could be in drawdown. So maybe we wait for a bullish candle to close above here, right? I don't see one blue candle closing yet. So sellers have control. We just a hair off of that 200 EMA. Now it's coming right back up. Guys, please, if you can on YouTube, leave us a like. Subscribe to the channel, okay? Tomorrow's going to be a big day. Tomorrow's FOMC, we're going to come in from 12 p.m. and we're going to stay till 3 p.m., okay? And we're going to walk through FOMC together. Okay, so as it came down there again, now it's flipped up, okay? Now we have 90 seconds to go, okay? So now we have a nice bullish hammer candle. Will it engulf? Maybe have one more bar advancing off of this? So I'm waiting down in here. I didn't get the opportunity. So maybe I have to trade off of this bar or watch where this thing will close, how it will close, where it will close. Okay. They've rejected it now, back down again. This could close black down in here and continue moving down. Okay. Now it's a spin top candle. It's got indecision with the last 1 minute. Okay. So you see how that candle flipped, was really strong. As soon as it got up to there, to that 9 EMA or right in there, the sellers offered and rejected it right back down. Okay, so that's why if you get excited and you buy early, this is what can happen. Now all those buyers are in drawdown. And look at the bar closing back down, maybe bearish down here and wants to continue to drive down. So you see how they suck in the buyers? That's what happens when you're counter trading. Okay. Guys, if you went in on the signal, like around 88, and just dropped down to 78, that's 100 pips. So you could be, reducing your risk, break evens, scaling out, or here's the liquidation candle. So this is what I was saying, a big black liquidation candle cutting right through here. Then maybe wants to trigger these pending orders. Okay, here's the close. Let's get our cut line. We'll continue 50% of this. It's got new lower low. There's the volume. Okay, we might get further push down, open bearish, filling the wick, maybe break for a new low. Okay, so remember, I'm targeting this white line for potential buys. Welcome, Justin. Good afternoon. Okay, so you still see now. Okay, now we're trading at the top of the green box. 5,077.76. We've got a wick and a wick, okay? So if you want to buy on discount, definitely, you're buying at a discount. However, I'd like to maybe follow a bullish candle. I'd like to at least see a bullish candle closing above 50% of a previous bearish candle. I still don't have that. I don't have an engulfing bullish candle as of yet. I don't have a bullish candle closing above this red box yet, okay? So you can still see there's a lot stacking against the buyers right now. And sellers are still here and they're present. Okay, but if you look at today's kind of double bottom here, one bottom neckline, second bottom breakout right up to there. Now we're retracing back down. So, like when we're looking for a typical pullback buy, somewhere in here would be nice. Maybe we could break out. But maybe it wants to come break this a little lower and come into here. Okay, but right now we got a bullish candle printing. Okay, so again, I'm just following the candle because if I make the same mistake on the last candle, remember that one flipped bullish and it came down and went down there? Same thing could happen with this candle, okay? But what it's showing me now is equal lows, okay? So this is different right there. See those? Those are equal lows, 5,076 and 91 cents. Now we have no more lower lows in the market, okay? So now the buyers are protecting the trend going down. Let's see if they can maintain that with volume now. Okay, so we do have now tweezer bottoms in place right above our higher time frame demand zone. Okay, and look at the response. Okay, now we have a nice bullish candle, but the previous one was a nice bullish candle too. But look at where it finished down there. So again, did this one break for a new high? Not yet. We have 2.5 minutes to go. Let's wait for the close. And we're going into 1 p.m. in the next 6 minutes. So we may have an hourly switch up, right? We might get a bullish hour. We might just get a fake out right now and then a bearish next hour and they continue pushing down. Okay. So whenever I get closer to an hour or 30-minute, again, I'm aware of the way how hourly candles open up. They can be manipulated. They can gap up, gap down, drive this candle up, to get more offers. Then they drive it down. All this shit can happen, okay? But if you're waiting for a bar to close, then you're waiting for the market to prove to you something without guessing. Okay, remember, just let's wait it out, see what happens. Okay, I still see the sellers are in control of this move from the highest point of the day, right? But the buyers now, it came into the top of a higher time frame point of control. Remember this green zone, what it was representing on the daily? Remember we came to the daily? Okay, so we still are above 50%. We're here at that hourly position right here. When we cut the hourly, this bar, oops, shit. Right over here. This hourly bar at 10 p.m., that bullish bar, we cut it in half. That's what I want to see, if the hourly will come right into that point of control. It just hit the top of it right now, okay? That's where those tweezer bottoms right there, those equal lows, that's where they just printed, okay? So there's the close. We just closed. It came up. Again, did not advance for a new higher high. Lower high, push down, close. So this bar engulfed that previous one, building here, okay? So now, if we take a trade, just heads up, you know you're taking a trade going into 1 p.m. And sometimes they do some monkey business right at the new hourly candle. So you got to go with the flow. If you like what you see and you buy, then you got to be able to, if 1 p.m. brings you down, you got to be able to know where to put your stop loss. Know if it comes down here, you could be getting bigger buyers. Maybe it's coming back up. Okay, so we've identified one nice bottom on the 5 minutes. So it came down. Whoops. It came down right here. Bottom one coming back up. So are we going to trade in the parallel channel? Is it going to come up and go back down? Let's say right there it gets rejected. Okay, what if we're coming down in the new hour right there and a double bottom? That could be the one that's going to have the significant bullish move. Okay, or we wait. If you're not in, I want to see where the neckline is. Are they going to reject it here or back up here? Okay, there's nothing wrong with observing, guys. There's nothing wrong with that. Sometimes you got to let this shit play out to look for a good probable setup. Otherwise, you go in, right? You go in with a buy now. It's your choice. I'm waiting, okay? Because I made that mistake on one of these calls where I went in 4 minutes prior to the hour. I went up 50 pips and I didn't do anything, just like this candle. And then as soon as the new hourly candle opened, it came down, hit my break even and stop out, okay? I reviewed that. I learned my lesson. I don't want to do that again. Unless I'm going to pip and dip and have some rules, okay? Okay, so we got a bullish candle continuing to push. They've rejected it back in that parallel channel. Okay, so the sellers are still present. Now, is this candle going to hold as an inverted hammer, or are they going to flip it as a bearish pin bar, close it back below here, and then we push down in the new hour? Will it hold, maintain above here? At least I can maybe flip this red zone back to green. Then I know that we've maybe picked up bigger pending orders down here at the hourly point of control at the top of it. I would have loved if it came a little deeper right in the midpoint at the white line. But sometimes shit like this happens. And then now, since I'm 2.5 minutes away from a new hourly candle, I can wait it out. What I like to do too is look at the hourly. Okay, just because I'm a 5-minute trader doesn't mean I can't look at what's going on in the hour. This hourly is a bearish spin top indecision candle, okay? So you see how close it came down into the midpoint, came right at the top and it's building back up. Still got bearish volume. This could close back down here, advance it down even lower the next hour, or it holds and then we break bullish for the next hour. But you see the last 2 hours we're consolidating right inside here, okay? So I like to watch right into the close on the 5 minutes. Sometimes right into the 1 minutes. Okay, so you see they've rejected it. We're trading inside here. This is the only thing that's holding this body up is this ignited head, this inverted hammer candle. Will it hold? Will they play some games here? And let's keep an eye on this. And just know, guys, like look at the average size of a candle. Like if you measure this wick to those, these are 80, 90, almost 100 pip candles, 50 to 100 pip candles, okay? So if you're trading with a little 20, 30 pip stop loss, you're probably going to get stopped out no matter what, even with these spin top candles, whether you're long or short. So you got to open up your stop loss. 100 pips these days is fuck all for a stop loss. So you got to know to lower your risk. Okay. Before we could get away with trading 20, 30 pip stop losses. Now it's like nothing. Even a consolidated candle has a range of 50 to 100 pips. It's unbelievable, the volume these days. So you got to adjust your risk. If you think you're going to trade like how you were trading last year, 5 years from now, the market is way above you. You got to adapt, okay? Part of trading is adapting. Look at that now. That was a big bullish candle. Look at what they did. Shooting star candle coming down. They sucked in those buyers again and trapped them. Okay, so I'm waiting. So I didn't get sucked in. I'm waiting. I think it's going to further break down at 1 p.m. Then the bigger buyers are waiting in here. They're not falling for this shit up here. Unless it can continue to hold, but it's still below, still descending. Again, a bullish candle did not close above. Here's the close. Now we're going into an hourly. So they sucked in those buyers, trapped them, closing back below. Here's the open bullish. Let's see for a quick rejection, short wick, and back to the downside. Okay, unless this bullish ignited candle can hold. Okay, it's still holding. It's only 10 seconds in, still holding. But it's got a big wick to fill. There's the rejection. So if it doesn't hold this opening balance, it can flip bearish and then just a small wick and it's coming back down here. So this will really show us if this hourly candle is strong right now to hold this. But again, it's got a big job to do to fill these wicks and close above here. So this could be the start of an opportunity where the bulls are coming in. Okay, so this is holding. If you buy, again, you're buying on an impulse, but maybe you're seeing how it's building at 1 p.m. That's up to you. I can even go into the 1 minutes. This is representing the first 1 minute. It's closing right now in 8 seconds. This is all the 1 minute structure. Is it closing above? I can even base 50% off of this. Okay. I'm watching 1 minute now. There's the 1 minute close. It did close. Another bullish 1 minute candle. So its job is to fill that wick. Can it fill and break for a new high? Will it get rejected back down? Okay. There's the break. So we got nice strong 101, 102. Okay, will it hold? I'm on the 1 minutes now. 1 minute analysis. Okay, so you see, even a 1 minute candle was an inverted hammer, and now they just flipped it bearish. It turned, see when it turned black? Now it's filling back up. It's going to close in 25 seconds. Okay, so you can learn a lot when you're looking at the 1 minute candles. You're going to see patterns. You're going to see ignited candles. You're going to see them break highs. You're going to see them get rejected. You'll see where they're closed. All of these things. Okay, so now we are pushing up through that parallel channel right here. Remember that one was based off of the higher time frames. Nice strong close. So we got higher highs. So we could either buy a pullback if it comes into 50%, or maybe continues breakout. If I look at the 5 minutes, it's building right now, okay? And again, we don't have a closure. So if I said that for this candle, you know, it came back on us. So this is another bullish candle starting at the new hourly. So what some traders do is wait the full 5 minutes to let this 5 minute candle represent the new hour, okay? I know it sucks because sometimes this could be a big bullish candle just breaking right through here, okay? But what happens if it just comes up here and gets rejected and it closes back down in here? Okay, I don't play this game of what would have happened, what should have happened, what could have done this, what could have done that, this and that. What ifs and buts. I don't give a shit about that. I make up my mind and then I follow the volume. Okay, if I'm waiting for this, I'm going to wait, just like I did on this one, this one, this one. If I went in on those, I would have been in drawdown there. If I went in on this one, if I went on that one, would have been in drawdown, right? Maybe for someone that's a big drawdown. I don't know what's everyone's risk tolerance here, but you should be at least below a previous low when you're trading, or if you're selling, at least minimum be above a previous high. Those are just like ABCs, 1, 2, 3s of trading. Like that's not a secret. Okay, but you see right now, like just for analyzing, the top of the green zone is holding with those tweezer bottom lows. Okay, those equal lows are performing this bounce, okay? But we're still, you know, going against the trend. This red zone is still intact, okay? We're trading back in that parallel channel. They could easily push this thing right back down. However, if this closes, like right here, we're going to make this red zone green, maybe look for a pullback buy off of this. or I determine the size of the wick, my open ignited and continue to break through here. Okay, so it came up here again. That is technically a lower high, still below the red zone, below the trend, and now they're pushing it back down. So now we have 30 seconds to go. Where will it close? How will it close? Wow, if they reject this thing, like you can see that, like how bullish that was, and how much offers there is up there. That is a 60 pip candle. Now they've rejected it. Where will it close now? Inverted hammer. Okay, it's still holding its ignited open. Will it hold it? Will it close above here? Will it close inside? Next bar, if they reject it like this, could open bearish ignited and one more drop down. Then we look for a double bottom, or we look for a buy at this white line. Okay, look at that. Another rejection. Okay, there's the close. Close with, there it is. That bearish ignited. There's the drop, what I was just saying. Okay, so now we look, we got to see for a higher low, or it comes down here for these equal lows, or it's the liquidation bar coming down, and this would be a much better opportunity to buy inside here. But do you see that, guys? You see the rejection? As I was saying, riding that wick, next bar would open ignited and drop. If that's exactly what I said, guys. I know what I say because I kind of predict what I'm going to say prior to it happening. That's reading price action. Okay, but now it came down, higher low, still respecting this. What if this candle flips and it's bullish again, breaking through here? But again, we do not have a blue candle closing above. So now is it time to short the market? And then, but you got to know we're trading in that big zone down in there. We can wait again. You know, if you follow consolidation, the bars of volume are kind of like right inside here. But did you guys understand how that 1 p.m. candle can fake you out, right? Unless you know to grab 60 pips, pip and dip, because you're going against a trend. That's what we try and teach here, guys. Be very disciplined with your trading. And learn, guys. That was a big bullish candle. Remember, it's 5 minutes. They rejected it down. Next bar, ignited, pushing down. Okay. Now, if we want buys, again, better probability. I'm waiting here for this white line. Will it come all the way down there? Will it break a new low? All of these things. Okay. So it's still bearish. All things above us are intact. Okay. See, I didn't get a blue candle close above there. It came into the parallel channel. Wick, 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 wick. Sellers offering and continuing to push down. Okay. So if we were buying, you're counter trading. You've got to have rules. There was some nice pips to make, but if you don't pip and dip, this is what can happen. This time is good for education. I know it's not the greatest time to be trading, a lot of this sideways action and stuff like this, but you can learn a lot at this time. How candles transition, going into the new hour, things like that. It's great for learning. I will say that about this time. And you guys see how many mistakes I could have possibly made in there if I was a buyer, right? That's why, guys, counter trading rules are so like what benefits me. That's what separates me from other traders. I know if I'm buying this, I'm going against trend. If I get my 50, 60 pips, I pip and dip. Or I'll take out 80% and leave 20% running where I bought in. Maybe this candle will take out my 20% running, but I've already cashed out because I'm not looking for home runs. If I buy inside here, I'm not looking for a move like this, right? That's what a lot of traders are looking for. I'm going from one zone to the next zone or from one bar to the next bar. I'm a scalper. I'm not a swing trader. I don't get in here to buy this and hold it until tomorrow morning. That's the difference between me and some other trader, right? But the same shit, if we were swing trading and these were 4-hour candles, or these were daily candles, this was Monday, this was Tuesday, this was Wednesday. What about this? This is Friday where it came up, then they faked it down, they closed it there, and then over the weekend, this is what they set up. This is a Monday candle, and they're pushing it down. That's the same shit, guys. That's why I always say candlesticks all have the same characteristics. These can be all single 1-minute bars, or these can be all daily bars. Play it like that. If this was Monday, Tuesday, you see what they do. They midweek Wednesday, they tricked you to buy, then they brought it back down there. Then, Thursday, Friday, and then they slam it. They finish their move. Okay, so same thing goes with any time frame you're trading. If I go back and I look at those 15 minutes, we have a lot of 15-minute traders in the group. 15 minutes are not really doing anything either, right? A lot of consolidation. They're going up, going down, closing right there. Start at 1 p.m. That's where they came up. That's where we saw it, that fake out. Then they're bringing it right back down there, and we're still consolidating. There's no real significant move. This is where markets move sideways. And this is where they can really trap you. If you're over leveraged, if you get caught on a buy, then you sell. You're hedge trading, you're revenge trading, getting pissed off at the markets, this, that. You're making so many mistakes in here. You're getting mad. And then all of a sudden you've blown up an account, and then you come to me and I'm saying, why the hell were you even trading in here? What were you even doing? What were you thinking? And then you're like, I don't know. Well, that's what you got to learn in trading is there's better opportunities. I know that this is shit volume. There's wicks on the top. There's wicks on the bottom. That was a nice return. This is now maybe an opportunity where you like the big return. It's bullish. Now you might want to bite on an impulse buy, okay? Because you can see it returned back up. So I'm going to go in on a buy, okay? Because I like that return wick, okay? I'm in a buy now. Why? Because I like that wick right there, okay? It's a nice return, okay? I know I'm going in on a buy on impulse now. I know that this candle has not closed above, but this is me on a smaller speculative trade, okay? If I get everything I'm looking for, then I might add to my position with a normal trade. But this is me now getting my feet wet. Okay, my first trade is not a huge trade. It's a lower risk trade. I know if I get stopped out, it's not the end of the world, but I want to see now if the buyers can close it above. Maybe then I can follow the volume while I'm emotionally involved. I'm in the trade. If it pulls back, maybe I get a better opportunity. But if I get stopped out, that's it. Then I move. I don't even want to keep my stop loss all the way down here. Okay, I'm going to put a real tight stop loss on this just below this wick. Because if they continue, if sellers push all the way down this wick, it's got a high probability it's going to break this and drop even further. What's the point of me giving an additional 35 pips to the market? I don't trade like that. I'm very frugal with my trading. I know that if they come bearish all the way down that wick, they will break down and they'll transact right down in there. Why give the market an additional 35 pips? For what? I'm not here to donate all my money to the market. I know that's what I'm banking on. I'm placing it to see if it rotates back in here. If the buyer's got to be inside here, right here. If they're not, I don't want to be part of this shit. Then I know that the sellers are strong right there. That whole green zone is basically my stop loss. If they're not in here, like right now, if they're not pending, if they're not coming up with pending buy orders right now, right there, if they're not putting a pending order right there to get filled, if they're not putting a pending order right there on that pullback, then this could just continue going south. And I no longer want to be involved, right? Because that's where the market will probably continue to break down, okay? So now I'm in the money, yes, but that's not what I'm looking for. I want to follow the close because all I see is a wick, a wick, a wick, a wick, and a wick, okay? So let's follow the volume now with 2 more minutes to go. And some targets, right, where I bought in on the impulse. If it trades up to, breaks that wick right there, trades into the red zone, could be about 40, 50 pip move up there. But if we target the most recent high is that wick right there, okay? Just below the hourly white line. I know it's a lot of lines on the chart, guys, but I want us to follow this live. Okay, so we got to close in 90 seconds. That's a nasty ass rejection, okay? So you can see it came up there nicely, 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 and then they slammed it back down, okay? So now Let's see if these pending orders are active and waiting in the market to get triggered. Okay. Look, and we still don't have a blue candle. So you can see I went in on impulse. I knew that full and well prior to taking the trade. That's why I went in small for a situation like this. But I got to judge the candle at close. Okay, now it's a shooting star. Now they're coming back down. So this is, will it fill that long wick, right? Or will it just come in, pick up some pending orders at a higher low? Will it close above here? Will it continue to come down further? And like I said, I can extend a stop loss even lower. I can protect myself below this hourly position, but I don't want to, right? There's no, it's not necessary, in my opinion. I'm giving it more than enough room to breathe in here. If the buyers are not here, sellers will break this and drop it down here. There's no reason to give it unnecessary pips to the market. Unless you want to give a bigger stop loss, then you got to adjust your risk accordingly. Okay, so it's a shitty candle for the bull side. It did not break any highs, did not close above. It failed, okay? Still got a little bit of blue volume in the body. Still insignificant, it's a spin top. Nothing special, okay? Close right where it opens. So again, we got to build up with a blue candle. It's another blue open of ignited right at the open, which failed, okay? We're still transacting in this consolidated shit zone. We still need to see a blue bar closing above here or a blue bar breaking some significant highs. Otherwise, sellers offer. We're still trading in this lower trend right here, this parallel channel that we have not broken, okay? This entire call, we've been watching that. So will this be the first blue bar that can actually physically break above here, close above here, and we might have a trend change? Maybe, but what we're seeing on every single candle is it comes up nice and strong and gets rejected 1 time, 2 times, 3 times, 4 times, 5 times. This might be a 6th time, right? There it is, okay? So that's why, guys, you know, it's not easy to just continue buying. We're buying a pullback. Yes, we are, but we're going against this trend right now. So it's not easy. Even though we're buying gold on a pullback, you know, everyone says, well, close your eyes and just buy gold on pullbacks, you'll make money. I'm here showing you guys that's not necessarily always the case, okay? We waited patiently. We got a decent buy down here, but you see it's not working out technically yet until we get volume to cooperate with what we're looking for. Otherwise, offers will just continue to offer and push this shit down. This is why I say, guys, trading is very difficult. It's not easy. It's an emotional roller coaster of going up, going back down, in drawdown, break even, going up, back down. It's a roller coaster. But if you manage your risk appropriately, you're okay. You're okay, right? I still don't have a closing bar. I know it's a nice blue bar. It's beautiful. But I still have 3 more minutes. And we've seen what's happened, okay? I wouldn't be surprised if they slam this shit down again. Let's see if we can get one closing blue bar above here. But if it starts moving 40, 50, 60, 70 pips, I don't need to leave. I sit here like an open duck with my open stop loss. I can go to break even if I like, okay? Otherwise, you got to determine something, what your trading style is. Like right there, it came up 30 pips. I don't know what everyone's trading style is, but otherwise, let's just let this thing close out where it's got to close, unless we get a significant volume-based candle. But we're still waiting for a blue bar to close above. Did it break its high? That high? No, technically it didn't. Okay, so those are tweezer top highs. Just like how we had those equal bottom lows, these are equal tops. So like, it couldn't just break one more pip just to break for a new high to extend the rally. Because if that happens, then these pending orders might come higher, higher, higher. You know what I mean? If the rally extends up. If the rally extends like it's not breaking, then these pending orders might start getting canceled and then they're starting to go lower. And when a seller sees that, they can easily reverse this and cut through here. So I would love to see out of this volume just to break that high right there. Otherwise, it's going to be another disappointing candle. So all we got to bank on is the volume going to close above this red zone here. We got a nice hourly candle building, right? We waited, we bought the pullback, you know, we waited for the pullback right there. So we got hourly volume on this hourly bar. This SST indicator is on the hourly. So Can we continue to travel up to our hourly high and continue to break through this previous resistance? And we have 70 seconds to go. And then you can go into whatever time frame you like. Like if you're still following the 15 minutes, right? We got a nice 15-minute candle building, but hasn't done its job on the 15 to break those highs. Wow. And we got a fuck you candle. You see that? How they slam that shit down? Oh my God. Like these markets are, wow, are they ever volatile? Did you see how they slam that down? Now it's building its way back up, but look, you could lose momentum with that big, but see how it's still building? Okay, so we got some buyers still asking after that significant drop. Can at least close above the red zone. That's all I'm looking for out of this bar. If it can't break these highs, at least close above here so that I can go red to green. So then if it comes back in here, maybe we're building some pending orders in this zone now and build a higher low. Right? Going from candle to candle. Holy shit. Look at that. That's disgusting. Close right there. Okay. And then same shit. They follow the wick, bearish ignited, pushing down. I can't even make this red box green because I'm very technical like that. Just like over there. Okay. So you see, they slammed it down at the last 30 seconds. Next bar follows that momentum. Bearish ignited, coming all the way down. Now, will it trigger, again, these buy orders with a higher low, or is it going to come right through here? And you can see how strong the selling is. So you see how we failed on that candle. It failed to take out the high. It failed to close above this zone. And I'm not surprised at seeing this. When I saw that fuck you wick, guys, it's like you can predict what's going to happen. Like sometimes when I see this shit, sometimes I close out this trade without even letting it come down to my stop loss. Because I know I'm going to possibly get stopped out of this. So it's just like I'm donating money to the market. Unless something like that happens. Another return wick right there. Like, you know, we're triggering these pending orders. But holy shit, is this ever in a tough ass range. This is difficult. My goodness. For both buyers and sellers. Like, that was a perfect move for a seller. Reject, bearish, and come down, but they didn't get the liquidation they're looking for so far. Okay, see how it built right there, that higher low? So those pending orders got triggered on buy side, but we cannot close strong or build. Holy, this is a war. I think Donald Trump farted. Breaking news. Donald Trump just farted and gold is dropping. That's breaking news, guys. Just like that. If Donald Trump farts, the markets move. That's what it comes down to. We need a Donald Trump fart indicator. He's live right now? Is he? Oh, please tell me that if he's live right now. I'm too busy watching these candlesticks. He's live at 4 p.m. Don't tell me he's live right now. Because I didn't even know. I'm unaware of that. 4 p.m. 4 p.m. Market close, he speaks. Okay, so we got a return. But again, the body has not closed. So I don't get excited. I'm the same way. You got to have a poker face when you're trading. I don't get excited when I'm winning. I don't get pissed off when I'm losing. Nothing. I allow the volume to dictate the move, and I go candle by candle. So we got a good reaction down there. That's what we want. But too much sellers here. Wick, 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 wick. We had a beautiful bullish candle at 115. Came down. Okay, so still holding this green zone, right? I got my stop loss just below there. But it's a war, guys, between buyers and sellers. I'm predicting it's going to go buy side, but I could be entirely wrong with the way how the momentum is. Look how they brought it right back up. Okay, so it looks good. But can we continue to advance, fill these wicks, break for a new high, close above? We're looking for a first blue bar to close above. 1 minutes are producing a double bottom. Yeah, 1 minute came up, back down, held. Right there, back down, held, holding. Again, can we get some 1 minute blue volume closing in this buy side area? Otherwise, I can continue to push this thing down. It's going to be a big fight, guys, okay? And I'm right back at where I entered, okay? So sometimes after trading, if you're sick of the trade, guys, I'm being honest. Sometimes maybe you're in money, you're in drawdown, you're right back to break even. Sometimes to just clear your head, sometimes what I do is I close the trade, like right now. And then I look for a better opportunity. But sometimes you're invested in the trade for so long, and then you're stubborn and you're like, I'm holding this shit, I don't care. But don't always think that mindset, okay? Sometimes it's good to just escape this. Yes, you didn't make money. Yes, you went in drawdown, because then you allow the trade to play out and you can possibly get stopped out. So sometimes I do this where I've been in the trade for a long time and it's right back to my break even. Sometimes I just get out to clear my head and not deal with this and just look for another opportunity, right? But sometimes the traders, you and I, retail traders, we get stubborn. We get married to our positions. And look at that, close below the red zone, so the red zone is still intact. I wouldn't be surprised if the sellers cut right through here, unless we get a significant body building. But here's the bar coding: blue, black, blue. And we're going into 1:30 in 5 more minutes. Wow. Holy. Yeah, so it got rejected. Red zone still in that trend channel coming down. So the sellers are looking to push down, break these lows. And my stop, I told you guys, is just right below this candle at 105. That's where my stop is. I'm just below the hourly low. That's it. I will verbally tell you guys when I get stopped out. But like I said, I'm not giving my stop loss an additional 30, 40 pips down to the white line. It's unnecessary on my part. You guys can if you want to open your stop loss and be down there, but I'm giving it more than enough room. If the buyers are not here, I can't see them being down in here. So this is trading in a range. This is trading in consolidation. This is where you're barcoding. This is the worst volume you can trade. The worst. Okay? So you guys are witnessing this with me. And both sides are getting frustrated. Sellers are getting frustrated that it's not breaking down. Buyers are getting frustrated that it's not breaking above. And the market is just continuing to come down, up, down, up. Just gather the volume. So I know that gold is not going to sit in here all day. It's either going to do something like this if the buyers accumulate enough, or sellers are accumulating and it's going to do something like this. There's option A and B. Okay, and the way how it's going is we were trending down, but we've made a nice significant bottom. So can we just get some closing volume to break through here? But it doesn't look like it's happening. It's either one of these directions, right? That's why I say, guys, sometimes, if you go in impulse, you get stuck. This trade, I went in on impulse and I got stuck. If I was still waiting for blue volume to close above here, I would not have entered, right? But I kind of felt after that grab that when it came up, that one went and then it built. I thought that was the opportunity. And it was a nice big bullish candle, but it did not break that equal high. If we broke that equal high, I guarantee you I would be having a different conversation with you guys right now. We would probably be up to this red line by now, okay? It's just a seller came in. I'm not saying it's not a retail seller. It's an institution came in and just stopped gold from moving up. But when they came down, it's building. So it's building higher lows. So I see that they're gathering more pending. Maybe this now opportunity or going into 130 can be, they got enough volume now to break these highs and then we can expect that move, okay? But you got to suffer some drawdown to realize this. And again, if I don't get closing volume above here, we could walk right back down at 130. Okay, so can we okay, there's the break. Okay, that's great, guys. That's moving. So again, stubborn kicks in. Stubborn traders, they're like, I held this shit this entire time. It just went up almost 55, 60 pips. Do I do anything or do I hold? That's up to you. Okay, a lot of traders can go to a break even right now, but I'm telling you, there's going to be volatility coming in 1 minute. Look at that. Holy. Have you ever seen a trader smash a monitor live? You may see that. I don't think I can hold a poker face any longer. You might see me literally smash a monitor. Can we get some likes and subscribe if you want to see Ron smash a monitor? Give me a like and subscribe and I'll do it. I'm just joking. You got to control yourself. I have smashed monitors back in the day. But I have a plan. I'll tell you guys after this candle closes what I do with that. I'll tell you guys a cheap way how to smash monitors. I've learned over time. It gets expensive. If you go to your local landfill, a lot of people throw their old computers, keyboards, shit like that. You're welcome to go in your old landfill. You can grab one and smash that. It costs you nothing. Okay. So we did close above. Okay, first things first. And we got a bullish ignited candle, guys. You got to follow me now because I'm going to talk fast. Okay, we closed above what we were looking for. We got a bullish ignited candle. It's 130, new 30-minute candle. So we advanced with a higher high on the previous candle. There was that sick rejection that we got, but we are building. So can this candle build, do its job, fill it up where it ignited, break through here, and get above that previous high wick right there? That was where we impulsively broke above, and that's what we could be targeting, okay? And if we can break out of there, we can extend to the white line, that's the hourly, and then the next one would be above there, 100 pips. Now, if you want to go to a break even, you're welcome to. If you want to continue, we're up 60 pips right now. Well, I'm up 60 pips right now. So first thing is, if you like, you can reduce your risk. Wherever your stop loss is, you can go to a break even if you like. That's up to you. I'm not here to tell you to do anything. I'm just a guy that smashes monitors here. Okay. If we want to wait and get rewarded for another move and a bigger move, can we close with bull volume now above this red zone? You see, we've broken the trend now, but we're still counter trading. It's a beautiful move. Don't get me wrong. That's 60. Maybe we target the white line. That's an hourly white line now. So it's not just this little 5-minute wick. But if you want to continue to hold, that's on you. But I'm going to go to a break even now. Okay. I don't want to carry any more risk in the trade. Okay. That's me going to a break even. I don't want to smash any computers. Okay. This is me. When I do that, I'm not smashing any computers. Now, the worst case scenario is I piss away profit. That's the worst. I got to live with that. Okay. But now maybe I get rewarded for holding a little longer. Maybe I can follow this volume. Maybe it can close above some targets. And, I held so long where it was building, it would be a shame to just exit the trade right now and maybe it has an extended move. So let's go to the higher time frame. Look at the 30-minute candle. It opened bullish ignited. It could fill. That's the 30-minute wick up to that red line. Right up there, 5,094. We're at the hourly resistance right now. So we need an impulse. There it is. Okay. Now I feel good to maybe scale out. I'm happy. That's 80 pips up there. So I'm going to take out 80%. 80. I'm going to reward myself so I don't smash any computers. I'm taking out 80% right there, 5,091 and 50 cents. And then I'm going to leave 20% running. Are we clear, guys? That's trade management. And we got ourselves the correct direction. But I based it off of that candle at 105. Okay? There was a couple fuck you candles here and there. But that candle that closed above 125, we got our ignited push at 130. And now we flip the hourly candle. So guys, please in YouTube, if you learn something, hit the like button. Please subscribe to the channel. Comment something. I read the comments every single day. Is there anything you guys were unsure about on that? Remember I said it could either break down. And you guys see, I didn't give any continuation stop loss. I told you guys, I'm very cheap with my stop loss. I was just below that wick right there. I told you guys. Okay. And then when a game comes up to a white line now, okay, I scale out. That's how I trade. That's an 80 pip move. Like I know I wanted to go 100, 300 pips. I would love that. But that's why I got a runner. I don't want to sit on a call for 2 hours and not be rewarded, right? That's what trading is, guys. Be patient, wait for a proper setup. But when you hit targets, pay yourself. You're paying yourself to sit and stare at a computer for 2 hours. Please walk away with something. It boosts your confidence. It can build your account. You can learn from this. And then let's do the same thing again tomorrow. You know what I mean? Continue compounding, guys. But this could get rejected and come all the way back down, right? We got to follow this candle. Okay, so it produced a new high, but we're still counter trading because if I look here, that's a lower high. That's the 30-minute resistance. There's a lower high, and there's the daily high. So now we got to follow the volume. If it closes above this red zone, I'm going to flip that one green. If it can close above that white line, then I know we can maybe possibly build off of that a little further. Okay, here's the close in 30 seconds. Trades SD. How do you hold through the drawdown? I could feel the tension in my arm as if I was the one on the trade. I just didn't over leverage my account. Okay, I trade with 1% of my entire account each day. I broke that down into 0.25%. Okay, so I know it's not even if I was to lose my entire 1%, it's still within risk of my entire day. So that one was just 0.25%. So if I lost, yeah, it sucks losing. I take it a learning situation. I lost, but it's not enough. I didn't blow up my count. I didn't do anything reckless, right? And then I look for another trade for another 0.25%, maybe another one. Maybe I'll lose one, but I'm not giving back everything. I could look for another trade, right? I'm a scalper, so I can sit and stare at these candlesticks all day. But what I do is the top-down analysis, and I set alerts at these zones. Right? And then I just watch what's happening there. I look for clues, liquidity candles, this, that. Remember how I built this depth of market for you guys? Those green lines? So it hit that pending order and hit that pending order. That's what I was saying. It was building those pending orders there. I tried to show you guys visually exactly what was happening here. Okay. And again, now we broke up. Did it close above that red zone? I'm very technical. Some guys say, Ron, I hate that you're so technical. I say, I'm sorry. I don't give a shit, right? Your opinion means nothing to me. I learned how to do this for a certain way. That's what made me this technical. Because other times when I was learning, before I was even training with you guys, I was cheating. I would say, okay, they did close above that, and then I'd flip it green. And then I would see that it would reverse back down because I was manifesting the move when the volume speaks. So now I don't play games. I let the volume do the talking. I don't talk. I follow. Okay, so did that candle, if I zoom in, did it close above that red zone? Technically, no, but it's still building, okay? That's what I did down here too. Did any of these blue candles close above? That was the impulse I went in, and you see it didn't close above. That was the first one that closed above. Even this bear candle that closed right there, I didn't make the zone red until this one closed below, okay? So, and when I make my zones, I do them for a specific reason, right? Points of control, Fibonacci levels, and I stick to those, right? Take my profit. I already took 80% out. I just have 20% running at a break even. So my runner can continue to be my runner. I hope my runner can go up 100, 200, 300 pips. I hope my runner hits today's daily high up here. That's what runners are for. But the bulk of my trade, I take out 80%. I know it might not be a lot for some other trader, but for me as a scalper, it is significant, okay? Because normally I'm looking for 30 pip moves. If I can get an 80 pip move, I've basically almost 3x'd what I'm looking for. So I'll take out the bulk of the trade. Okay? So I'm just going to clean up the chart here. Just get rid of some unnecessary shit. Cleanup time. After my kids are done playing, I always tell them, tidy up. They never do. I always got to tidy up, me and my wife. It sucks, but that's life of being a parent. You guys know if you guys got kids. When my kids were really young, at night, I used to trade London session, half asleep, getting up at 2 a.m., walking downstairs. I would walk on pieces of Lego, almost break my feet. I would scream and yell and wake up the whole house. And I'm like, just pick up your Lego. Like, how hard is this shit? There's equal highs, okay? So I look for these things. I don't know about you guys, but I look for this shit. There's equal highs where it broke the hourly resistance, okay? Impulse, equal highs now. Right there, okay? And then now they're rejecting it. So this could be the move that comes down. So, if you're waiting patiently now, maybe you could wait for this green zone. Like if it comes back down, like the depth of market could be coming inside here, and that could be your pullback buy opportunity to take it back up there. But if the sellers now knock it down, that's still equal highs. It's still trending down from the highest point of the day. If they close it below there, red, and then we're coming down, guess what? It's filling that wick and driving down into there, right? So that's why I love scalping the markets, because I can go either direction. I can go either way. I can be a buyer. I can be a seller. I can wait. That's what I look for in the markets, guys. I hope I broke that down clearly. I'm being honest, it was difficult trading this volume. It wasn't easy. This could have gone easily against us, right? It could have easily. When it came down there, it came down. This candle, I'm not going to lie, when it closed below here and it opened bearish, I thought that this would be the liquidity candle coming down and come down here and hunt me out. But it returned back up with, look where. This is why analysis is so important. See where those bodies are? Body, look at where the wick was, right above those bodies. That's why bodies of volume are so important. Everyone asks me, Ron, you always like base shit off of the bodies, but believe me, I wick analyze probably more than someone who analyzes wicks for a living. I'm probably in the same category with you. But look at now. I do analysis after. Whether I win a trade, lose a trade, break even, if I'm still in a trade, I still look so that I can learn from this for tomorrow or the next day. See how they didn't break those bodies right there and it created a higher low? And that's where those buyers, the buyers that made this move were right there. That's where it was. Okay, at 125 going into 130. If you guys want, like, circle this, do something, analyze this. That's what got us in the money, was that wick right there. Remember, my stop loss was just below that liquidity wick right there. So this helps you guys understand where stop loss placements, you can put them and survive. Now, this doesn't surprise me. Typical pattern, equal highs, rejection, bearish engulfing candle coming down, right? Guys, like we've seen this on today's call, a lot of these same patterns. There it is. Came up right there, back down. It drove back up. Look, you're telling me that candle could not break one more pip or one more tick? I call bullshit. When I call bullshit, that's where the market says, that's it. We're not breaking it above this white line. Hourly right there. Make it red. Go backwards. Analyze. Bring this backwards. There was volume that they never brought. Look, I could go backwards. There was an equal high wick. There was a body right there. Like, you see what I mean? When you make your zones and you go backwards, you can see exactly what you need to look for. It's not rocket science, right? It's price action is a language. It's telling us how it was trading before we started the call, 11:40. Remember, I didn't get on the call with you guys till noon. There it was. There was a wick. There it was. Drop. Remember, we had the SST signal right here at 88 to sell down. We bought the return back up. And look at what it's struggling right there. Stretch that into the future. That's where I could place another alert and wait later this afternoon if the buyers continue pushing it up. Maybe it closes back above there. And then we're going up to where? Maybe to the daily high. However, to the daily high, there's bodies and bodies, right? So I always know that sometimes it's not going to, there could be a seller right there protecting it. There's a body, bodies. There's my red zone. So if I'm still in buys, I got to know that if a seller who sold today's highest point, not me, not you, an institution, if they want to protect it, that's where they're protecting it, right? It's not rocket science to see that. So if we're trading in there, like if we're coming back up later this afternoon, it could come right in there, and that's where the drop could be, right? And then if it's dropping, you're dropping either in a green zone here, green zone there, or green zone there. Okay. You guys, how was today's call? Hopefully you learned something. Guys, do you mind if I go over the blog I wanted to go over? This one on Terex Gold. This was that one we sent out a couple weeks ago. It went up 65%. Gap up, gap down candles. Okay. If you guys can read this, you know what I mean? It's very, very informative. Okay. Because you might see, remember, candlesticks, this can be a 5-minute gapped up candle, can be a 1-minute gapped up candle, or a daily gap up, okay? So remember, like a market closed down here. Let's say this was a Friday, and then over the weekend, there was some type of shit happening. Trump farted over the weekend, and then the market gapped up to here. You see that gap where there's pending orders, but it bypassed all those orders, right? So those orders are still sitting pending in the market, okay? Let me show you now on gold. Okay, where you could have got in. Here was, let me show you on the daily. Okay, let me go to the daily. Show you how to identify. Was it? Maybe this one does not show it. I don't think this chart shows it. Oh, here it is. Okay, you see this. Okay, do this on the weekend. If you see shit like this, guys, I'm telling you, please pay attention to this. Here's the close, Friday, 4 p.m. Came up there. There's the close. So closing price on Friday was right there, 4,982. Look at where it opened. It opened right there on Sunday night. Okay, so that's a gap, right? And then it opened at 5,009. And then it was bearish right there. That's where it stopped. So from the closing price, right there, see this? There's a gap. There was pending orders. There could have been sell orders, buy orders, right? Pending in the market over the weekend, did not get triggered, okay? And then what I do is either at the top, bottom, or the middle. I like the middle. I like the psychological midpoint. I'm a psychological trader. So what I do is you right click, you can add an alert. See, I already have an alert on it, and so I don't need to edit it. And look at when the market now we're back testing, okay? Look at when the market on any time frame, whether you're an hourly trader, this is where the hourly candle, look, Monday at 4 p.m. came in there, and look at what it did. It triggered all of those pending orders that it bypassed on market open. So you can see the market came down eventually. Took a long time. Came up, came down. It didn't leave that money in no man's land. It got that money, and then look at what it did right there. But you see right there where it was trading right near the all-time high. That's where it traditionally should have broke out for a new high. Seller said nope, brought it right back down. There's where we got respected today, 10 a.m. And look at what we just did. We bought the pullback hourly candle driving up. Okay, so you guys see. And then if you want to go further, right there where I have that marked. If you're a 30-minute trader, go back. Look at the 30-minute. You can see exactly when it came in, came down, closed. There's your bullish ignited off of the wick. That's exactly the 5-minute buy I took today. There was that wick, and I bought the next candle, right? So that's the same setup, okay? If you're on a 15-minute trader, now you go in and you look at what happened on 15. It came right in there, it closed. Look at when the next 15-minute came up. Did it close above 50%? No, got rejected. But then it started when? At the daily open, 6 p.m. And again, if you miss it, there's a significant 15-minute candle. Cut it in half. Find the point of control. Wait 15 minutes, 30 minutes, 45, 1 hour. 1 hour and 15 minutes, 1 hour and a half. Look, if you waited, you could go, set an alert and go do what you got to do at home. And then look at it came in there, gave you an alert, closed above, came in there one more time, higher low, picked up pending orders. You could have been in a buy there, right? But it's all based on that liquidity grab there. I'm a 5-minute trader, okay? 1-minute trader. I can watch what's happening on the 5 minutes. See that trend coming down, bearish, 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 bearish. Where did it stop? When it filled that gap. And look at the return, okay? If you're a 1-minute trader, I know I got to go far back, but if you're a 1-minute trader, you can literally see there's a pattern there on the 1 minutes. The 1 minutes came in there, right there. There it is, 4:36 p.m., 37, consolidate. There's the close above, retest, come down, push up, then it starts to break out, right? You can see the results when it comes in there. Guys, please read this blog. It's very informative, okay? And lots of education, guys. I'm going to go one day and it's just going to be, I'm going to show you guys all the education we have because everything we do on these live calls is all here for you. It's like you're going to go back to school. This is like you're enrolling in college. You can self-teach yourself this education. We're here alongside to help you break things down, but there's so much to learn here. If you go on this advanced level, there's over 100 webinars, zone-to-zone trading, wick analysis, scalping. That's what I did. I took that trade off of that wick. You gotta learn these things, guys. There's so much golden zones and psychological 50% levels. Is that not what we trade all day? Like, there's a 3-hour webinar breaking things down. Tweezer tops and bottoms, importance of equal highs and lows. That's what we saw on both sides today. And that's where you saw the market pause and move the opposite direction. If you're a small-time scalper and you're looking for 10, 20, 30, 40 pips, you could literally look for this shit all day, every day, right? So, guys, and I was telling you, don't marry a position. I don't marry positions. I get in and I get out. I've been married once. I'm married to my wife. That's it. That's the only position I'm married to is my wife. I hope she doesn't listen because then Ron won't be married any longer. But I'm married to my wife. I don't marry positions in the market unless I'm holding Apple, unless I'm holding physical gold, unless I'm holding Nvidia, unless I'm holding something that has, upside potential in the future. That's what I'm holding. But when it's scalping, I don't marry positions. I'm in and out because I know next 5 minutes it could come tumbling right back down, right? So I don't play those games. What could have happened, should have happened. I still got my runner, but let's follow it. Like right here. See that was equal highs, bearish, came all the way down. Okay, so still, if you follow your 9 EMAs, it's hitting that 9 EMA yellow line or green line. Let me get rid of these arrows. Okay, so did it close above this red box? Yes. Okay, see how slow Ron is? Did he make it green? See, there it came down. Did it close below? No, closed inside, back up. Look, now we're closing above this zone and we're continuing push up. Look, red to green. If you're still holding, I'm still holding my runner. Maybe that's what I got to do is just talk and keep my runners. Because if I was watching that, maybe I would have went out on it. Now I'm up again. My runner is moving. There's 100 pips. Okay, at 100, if you're happy, life is good, take the money out. I'm going to close my entire trade because I'm done this call. I kind of want to I want to go and work out. I don't want to be sitting staring at my mobile phone. So I'm closing my entire trade right there. The remaining 20% is out. That's a 100 pip banger, right? And if it continues to go, your next target is the next zone up there, right? Just follow it. There it did. It broke that high. Made a new physical high. We flipped the hourly candle, right? Just took some time to develop, guys. So finally, guys, if you want to join the team, join us. Myself, Dave, the entire snipers. If I put on the Discord, guys, let's see our Discord community here in commodity section. Here's everybody, guys. Mike, Macy, Borex, everybody's in here every day. Everyone's trading together, guys, community. The free Telegram channel, all of the links are here. And join the team, guys. If you guys want, it's up to you, right? If you want to take your trading to the next level, you got some high experienced traders here that know what they're doing on a daily basis. Guys, we appreciate you guys. So thank you guys so much. Tomorrow, be ready. Tomorrow's FOMC, okay? Have a plan going into tomorrow. If you're going to trade pre-New York, remember all the earnings this week too. Big tech earnings in the after hours tomorrow. It's going to be a big week. And then we're going into February. February is the best month of the year, okay? I'm telling you guys, February is the best month of the year. Why? Because it's Ron's birthday next Monday, February 2nd. I'm just playing. But I'm a groundhog. Groundhogs. If you're an Aquarius, you guys know all about Aquarius, okay? You guys know about us. We don't play games. Aquarius don't play games. February will be the best trading month of your year, and it's Ron's birthday. So we'll see you guys. I hope you learned something. Let's all have a great day today, and tomorrow be ready. 12 p.m., and we're going to go till 3 p.m. We're going to go slowly, and we're going to do gold, NASDAQ, and Dow Jones tomorrow, okay? Keep in mind that the Dow Jones had significant news with United Health today. Tech could maybe see a little bit of a rally going into the earnings tomorrow. Lots going on, guys. And just trade with proper risk management. Be patient and disciplined. If you make a mistake, it's okay. It's not the end of the world. Learn from it. right? Those are lessons. Okay. If I got stopped out here, believe me, I would have been reviewing this trade and learning from it. Okay. That's how you're going to get better. That's how you get better in anything in life. You learn from your mistakes. We all make mistakes, but you learn from it and you're a better person. You're a better trader. Keep learning, guys. It's a lifelong skill. Dave and I have been in this game for a long, long time. You can see we got gray in our beards. And we're wise, but we've learned. Believe me, we didn't learn this overnight. It took years and years and years and years. But study your candlesticks. It's a language. Anyone can speak this language, right? You can learn this. It's universal. It's a financial language that a lot of people don't want us to learn. That's why YouTube won't push us out in this algorithm. So we need your help, guys. They don't want us to be financially independent. I'm telling you, the world is not ready for us. But it's going to be a new generation, guys. You're going to be self-sufficient. You're going to learn how to make a supplemental income on the side. Utilize prop firms if you have to. If you have the own money, make sure you know what you're doing with your own money. But just be smart, guys. Okay? We'll see you guys tomorrow. God bless. Have a great day. Thanks to everyone in the Discord. All of you guys posting, sharing charts, adding your input. Amazing, guys. Amazing. Keep it up. Don't stop this. The more you post in here, the better you're going to get as a trader. You're going to get input from all of our seasoned traders in here. You're going to learn a lot. Don't be shy. Please don't be shy. I don't care if today is your first 5 minutes learning how to trade. Post your shit in here. There's going to be someone that's going to help you in this community. I promise you that. Okay? Have a good day, and we'll see you guys tomorrow. Okay? Be ready for FOMC tomorrow. Have a plan going in. We'll see you guys. Thank you guys so much. Thanks everyone on Zoom and everyone on YouTube. God bless. Leave us a comment. Let us know if you are learning what you need further education on, okay? Some simple things like, Ron, when is COMEX? What's this, that? Those are simple things that you can learn on yourself. But if there's more things like you really need help with, let Dave and I know, and we can dedicate webinars, we can dedicate blogs, we can dedicate live sessions towards that, okay? And guys, next week, I'm going to be opening up the Zoom to anyone that wants to talk with me and have like a live one-on-one, okay? It's not scripted. We're gonna go with the flow. I need someone who's not shy, okay? And help you. You can just talk with me what's going on. Maybe we talk about your charts. Maybe I can help you. You will help others. And that's how maybe we can learn, because Ron is getting sick and tired of talking here. So maybe I need to hear someone else. And I'm sure someone on YouTube wants to hear someone else in the group, you know, and that's how we can all learn together. Okay. So I hope some of you guys step up. I would really, really appreciate it. Okay. And we can switch things up the way how we do stuff around here, and we can have some fun. Okay. Thanks, guys. We'll see you guys. Have a good day. And keep an eye on the Trump farting indicator. It's coming very, very soon to SST. Anytime Trump farts, the markets react. So we will have that indicator coming very, very soon. Exclusive indicator. Okay. Have a good day, guys. We love you. Have a good day. Thanks, guys. Enjoy the rest of your day.
Recording stopped.
Bullish, still bullish. See if it wants to tackle 5100. That could be the double top, that red box up there. So just be careful around 5100, just below today's daily high. But it's gold. You never know. It could break right through. Have a good day, guys.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.